This content reflects my own personal opinions and is not financial advice. With that said, let's kick off today's episode. RWAs are overtaking stablecoins as institutions, governments, and protocols lock real assets on-chain worldwide. This is institutional migration. Let's break down the 5 biggest moves right now. So this first article talks about Ondo Finance is already converting institutional cash into on-chain treasuries with real assets under management backing them. The OUSG is a flagship tokenized fund that gives institutional investors on-chain exposure to short-term US treasuries with enhanced liquidity, transparent yield tracking, and that 24/7 access to the broader digital treasury market. This is something that I've explained in several occasions. Ondo Finance is by far the market leader when it comes to tokenizing treasuries, particularly US government-issued bonds on the blockchain. As I've uncovered in previous episodes, Ondo Finance is not just stopping here, it's actually broadening its net into other tokenized products, whether it's tokenizing equities and stocks on its blockchain system. So this is really a bullish sentiment. So this comes to show that Ondo Finance is slowly but surely being adopted by those huge institutions and corporations. So this is very, very good news. I'm going to show you a quick chart just to confirm the US Treasuries is actually $9.25 billion as total value locked to date. If I hover into this week's view on the makeup of those tokenized treasury funds on the blockchain, you can see that the Ondo short-term US government bond fund, which is the OUSG denominated, is almost $780 million out of the $9 billion. So it is increasingly gaining more capital onto that short-term US Treasury bill, that famous T-bill on Ondo Finance blockchain. You can see that BlackRock, Circle and Franklin Templeton are the top 3 that's occupying the majority of that $9.25 billion TVL. We're going to be seeing a lot more tokenizing US government treasury bills, but it's not going to stop there. There's a much broader market outside the US when it comes to tokenizing those government issued bonds on the blockchain. So this next article is around Chainlink is the infrastructure RWAs depend on, delivering verified price, custody, and net asset value data, so blockchains always know the accurate real-time value of the assets backing tokenized instruments. This trusted data layer is actually essential for transparency, compliance, and institutional confidence. Again, I explained Chainlink is similar to Ondo Finance as their institutional graded tokenized RWA coin project that is increasingly becoming adopted and accepted on the mainstream by those huge institutional players, because we all depend the likes of Chainlink. As I've explained, the main value add that Chainlink provides is the leading oracle, providing that data feed from the physical analog world into the blockchain, because without real life data you can't bring to life the smart contracts and all of the RWA coin projects that depend on oracles such as Chainlink. So Chainlink for me has to be one of the top RWA coin projects that you ought to do your research, because this is something that every RWA coin project will be needing at some point. And if we're already seeing the level of endorsement and acceptance on the mainstream on the dependency on Chainlink, well, you can clearly take it to mean that it's a huge bullish sentiment on the upside and growth. Right, the next interesting article here is around VeChain. Now, this is something that is brand new and I've covered for the first time. So just to clarify, what is VeChain? VeChain is being founded to improve supply chain transparency. VeChain is now enabling regulated real-world asset tokenization at industrial scale. Its win of the EU Digital Product Passport rollout establishes a unified blockchain-based system for tracking goods and services across the EU single market, connecting manufacturers, distributors, and retailers on a standardized compliance framework. This marks a major step in government-level adoption of blockchain for regulated supply chains and real-world traceability. So this is really, really interesting, because VeChain seems to me the leader when it comes to tokenizing supply chains and its ecosystem onto the blockchain, right? The actual possibilities are endless because every economy at its fundamental base layer is supply chain, fast-moving consumer goods particularly. So we all need supply chain distributors and logistics. And the issue with that is every company manages a supply chain in silos, and there isn't any way to actually check on the accuracy of the data. But if you put all of that onto the blockchain, which is decentralized, well, that ultimately is going to bring the single truth of the data across all the supply chains, whether it's at a sector industry level of supply chain operators, or in by region, by countries, by continent, or even at a global scale, which is what blockchains can easily provide. And in addition to integrity and accuracy of the data, it provides 24/7 access. So for me, VeChain, we need to really keep a watchful eye on its potential. But for what I'm seeing through this actual win, which is a very significant win in supporting the EU passporting, which is one of the fundamental regulatory pillars of the MiCA regulation, the crypto regulation governing real-world assets, stablecoins across the Eurozone. Well, this is going to set VeChain heads and shoulders above every other blockchain operator who specialize in supply chains and logistics on the blockchain. So this is going to give an extra level of endorsement and acceptance at a government and institutional level. So this is rather significant and very positive news. Another interesting use case around Saudi Arabia. Now, Saudi Arabia's National Blockchain Property Registry is a state-level move toward tokenized real estate, placing legal ownership and land records directly on-chain. This shift can dramatically improve transparency, help reduce fraud, and streamline property transfers, setting the foundation for Real Estate 2.0, where government-verified ownership data lives on secure, interoperable blockchain infrastructure. Again, this is something that makes total sense because we all heard about tokenizing real estates, particularly premium real estates, on the blockchain. I gave several videos on the likes of Mantra, who have reached a $500 million deal with a Dubai realtor in tokenizing premium real estate for the Dubai region. But in addition to that, you need to think about the notary services, how you can verify the actual legal ownership of the properties. Once it's been bought, well, you need to cover the notary service aspect, the title and deeds for these tokenized real estates on chain somehow. And this is precisely what this announcement aims to achieve, is how you can tokenize land registry on the blockchain. So no one can tamper, no one can commit fraud on the deeds of the properties that is registered in the land property registry on the blockchain and so on. So this is clearly going to be a trend for other nation states to tokenize their national land property registry on the blockchain, taking the example shown here with Saudi Arabia's initiative. The next one on the list is around Citi's roadmap for crypto supremacy, showing a major US bank positioning itself to lead in tokenized payments, settlement and custodial infrastructure. By building a full-stack digital asset framework internally, Citi signals that institutional finance is no longer experimenting. It is actively preparing to scale, compete and integrate digital assets directly into the core of global financial operations. So again, this is the trend that I've already spoken about in a few episodes of mine, where we're going to be seeing banks and institutions starting to compete with the crypto exchanges to become custodians when it comes to tokenizing assets, whether it's stocks and equities, stable coins under its custodial layer. In fact, I've just received a notification through BBVA, which is one of the leading Spanish banks in the country, now offering for me the possibility to actually buy and sell digital assets. I just purchased a handful of Bitcoin under my bank app. So clearly the trend is there and it's alive and kicking. This is no longer experimental. This is no longer smoke and mirrors. This is actually happening in practice. So this is really interesting, and it'll be interesting to see how the banks are going to be competing, the likes of Coinbase and some other reputable crypto exchange platforms. And I see this makes sense for banks because banks historically have institutional grade security under its same custodial platform, capitalizing their centuries worth of security infrastructure that they have, which perhaps is much more mature and institutional grade than other crypto exchange platforms out there. So clearly the trend has been set. So this leads to another similar financial services-like announcement on crypto, where it says BlackRock, JP Morgan and HSBC are openly signaling that yield-bearing tokenized RWAs outperform traditional stablecoins, and they're highlighting the XRP ledger as a key settlement and issuance layer. The message is clear. RWAs are becoming the backbone of the next generation global finance, where digital assets are tied to real income-producing value. Now, this is very interesting because I explained the differences between XRP and stablecoins. They both actually are the plum infrastructure. So between them, they take care of bringing in the TradeFi wealth onto the blockchain. It just so happens now that XRP is trying to catch up with the stablecoins, because the stablecoin market globally is much larger than XRP. Stablecoins is around $300 billion of total value locked stablecoins on chain, whereas XRP I think is not even $10 billion. Even though they are trading well behind the stablecoin market, it's good to see that there is some open competition between them. So this is very interesting to keep a watchful eye on. So if I round up this week's episode, the biggest players in global finance have made their choice, and it's not meme coins, it's not NFTs, it's real-world assets on public blockchains, tokenized treasuries, tokenized real estate, institutional settlement rails and regulated supply chains. This is the beginning of the new financial system being built in real time. That's all I have for you for today. If you value clarity on Bitcoin, blockchain technology and real-world assets tokenization, stay alert. Subscribe and enable all notifications to stay ahead of the curve. Share this episode with those who need to understand what's coming, friends, family and colleagues. This channel aims to deliver insight, no noise and no hype. Subscribe now.